Good evening and welcome to the FITT Show. I'm Bobby P. Kinzer,
And I'm Thomas Doty.
and we are the FITT Show. Financial information for today and tomorrow. Welcome around the country and around the world. Yes, we go outside the boundaries of the United States and out of the continent of North America over into Europe, even in the South America and Australia. We've got friends on there too. So, welcome everyone. This is a show where we provide information about building wealth, about investing, about managing your money, about mindset with how to handle money, and much more. Anything you want to talk about, we really willing to cover it. So, Dote, how are you doing today, man?
Man, I am happy to be alive.
Well, I'm so glad that you are, so we can have this show because it'd be hard to do it by myself, man. It ain't the same without you. So, Dote, first of all, I like just to start off with telling people to make sure they put comments in the comment box because that helps us. And click on the star. And look, y'all, click on that star button as many times as you can because if we get 200 stars, that opens up to more people. I don't know why they are limiting us because we have over 2,500 actual friends on this particular site. But that's how it works. That's how the algorithms work. So if you can please help us with that and click on the like button, but definitely the stars button. And when you put comments in the comment box, that is so helpful because that are exponential algorithms that is for some reason it goes out to even more people. Okay, welcome aboard everybody that's coming on board. I see our faithfuls getting up on board, and we're going to have to start getting the prize for who gets on the first because I think there's a competition out there who gets to come on first. It's really interesting. But look, you all got a lot to talk about. A lot of things going on in the market, and just want to let you know. Last week we talked about don't go broke in retirement. Got a lot of great responses. A lot of people were taking notes, and we try to provide as much information as we can. And just remember, if you have any comments or if you have any suggestions on topics that you'd like for us to talk about, also put those in the comment box too. We really would appreciate that. So with that, though, last week we took a beating on the stock market, and we always start to show off. For some of y'all join us for the first time with the top of the pops subject, the stock market.
Yeah, and it's been volatile. It took a big dip yesterday, but it came back today, and uh, so much is dependent on the Fed rate cuts, which particularly affect the technology stock, the growth stocks, particularly the Magnificent Seven, as they're called. But as you can see, for the week, the Dow is slightly down, almost flat. Excuse me, NASDAQ is up a couple of percent, and the stocks that I like are doing fantastic. Microsoft's up to 428. Even Tesla's up a bunch, even though I think Tesla's in for a rough go. They think it's gonna be rough before it comes back. But again, that's what I'm holding for the long term. I think eventually Tesla's going to be a very solid company and stock. Apple's hanging in; they're up to 175. Pfizer kind of slipped a little bit, and Nvidia is going up 47 points, almost 5.5%. And this Google, this is the one I told you guys about. I got back in at like I think it was like 130. I got back in, and it's done really well in a few months that I've had it, and I think these are stocks that are going to do well over the long term. But in the short term, so much is dependent on what the Fed's going to do with interest rates. They were expecting a rate increase in June, but some economic data came out that showed the economy was still going strong, and that kind of put that June uh, rate cut in the rearview mirror. That people are thinking that's not going to happen now, but we got to wait and see how things go. The information that came out yesterday was negative as far as inflation. It showed a very strong economy. The information that came out today kind of showed that inflation had cooled a little bit. So I think, again, it's going to be a while before the dust settles and we determine that it's time to cut interest rates. But I think once that happens, things are going to be good for the good stocks.
Well, though the commodities are starting to move, man. Gold is moving. Gold is up $23 today. It's been going up every week, and lately, earlier last year, it wasn't working like that. But gold, if y'all into commodities, and I'm talking about, it's two ways. It was more than one way, but one of the ways you can buy gold is in a fund. The other one is you can purchase actual gold and have it being held at the place where you bought it from, so you can trade. Yes.
Hey, Bob, you can go to Costco. Costco has sold over $200 million in gold
What?
bars.
Costco?
Yeah. Well, their biggest item is jewelry, but they're selling gold out the wazoo. Everybody's buying gold. It's kind of a novelty thing, but it's the way gold's going up. It seems to be good, but a lot of people are buying gold from Costco, and every time they announce they have some, it sells out very, very quickly.
Wow. So that's another place to buy gold. And
Yep.
like I say, you can buy gold and hold it. Obviously, if you're buying it for Costco, Costco doesn't hold it for you. It
Right.
means you hold it for yourself. So if I was you, I make sure I have a very secure safe, at home, especially for people that are listening. But
I don't have any.
I don't have any here in this house, so don't even try to come over here. So, I'm up $1,000 an ounce.
Right. Ain't nothing wrong with that.
And the silver is up too. I got silver at $16 an ounce. Yeah, silver is up to almost $25 an ounce. So
yeah, what is it? Gold's over 2,000 now, right?
Say it again.
Gold is way over 2,000 now, right?
It's 2,300 though. I got in at 1,300, and it was interesting. I was tracking it, and I thought I missed it. It was at $300 an ounce, and it went up to 600. I was like, oh, I missed it. Then it went up to 900. I'm like, wait a minute, and then it went up to 1,000. I got in at 1,300, and now it's at $2,300. So I'm up $1,000. That's a pretty good return.
For sure.
Just wanted to share that. But let's talk about our next wonderful topic, which is our topic for today, by the way, you all, is crypto for you. In the crypto market right now, it's it's crazy, man. It's so volatile, but it's doing good because the week before last, it went down. 2 weeks ago, it was rolling. Then all of a sudden, the next week, it reversed itself and lost about week to week over $2,000 of Bitcoin. But this week, Bitcoin is up $1,634 per Bitcoin at $70,022 a Bitcoin. That's up from $68,338 per Bitcoin. The market cap for the total crypto market, we're going to talk about that, is $2.6 trillion. But get this, dope. Bitcoins is half of that. Bitcoin is over 1 trillion in the market. And that's why it's still the number one and the most thought of. It's up 2%. We've been tracking Solana, and it's been going up. This is the first time I've seen it go down by $11 because Solana been rolling every week. It was just going up and up and up. Last week it went up to $183. Now it's at $172. So that's interesting. And Dogecoin is up a penny. So dope. This week, my sister noticed Costco's selling silver too. I guess they selling silver blocks also, dope.
Yeah, I just think that would be kind of awkward to buy it, to get it, to insure it. I said I'm going to buy some gold, but I would do it in the form of a ETF or a mutual fund. I don't think I want to be bothered with the physical
holding it.
Yeah,
but you're your own banker that way. You don't have to worry about somebody else going broke or going bankrupt or taking scam. All these scams and stuff, though.
One of the good things is eliminating stress in your life. And I think having gold in my house would bring stress. So,
oh man, you think so? Don't
I
Dan, you
know
can put it
so.
in. How about putting in a safety deposit box at a bank?
Yeah. That does nothing for me.
I see.
I can look at a mutual fund and see the account just as going to the
And
going to
and
the
and
yeah.
as you can see, as we always say, ladies and gentlemen, there's no one right fit for you.
Exactly. You do what works for you.
You do what works for you, and though what's working for you is definitely working.
Oh yeah.
So look, so this week we're going to talk about is crypto for you. So I just want to use share a few statistics with you. Now, I mean, it started out maybe about 300 cryptocurrencies, but as of March 2024, there were 13,000 cryptocurrencies. But check this out. Most of them are dead cryptos, and it's only 8,985. And and me and Dote always talk about if you're going to be in the crypto market, kind of makes sense to stay within the top 10. At least that's what we try to report on. We stay with that. But there are around 420 million cryptocurrency users across the globe, and 18,000 businesses now, Dote, that accept crypto as a form of payment. Because that was the actual original purpose of creating cryptocurrency. One is to go against fiat currency. That's the currency that's in your country that is controlled by central government, central banks, and so is providing another way, a peer-to-peer purchase, so that you can purchase items. Another little statistic: the crypto space, Dope, statistics show. I told you the market is over 2.7 trillion. But Dope, every 24 hours, cryptocurrency over $172 billion of currency is being traded. That's amazing. But we're going to talk about a little bit more what cryptocurrency is so we know what is being traded. Now, the Bitcoin has the highest current market value, which is, I told you, approximately 1.4 trillion. And another thing about the 24 hours, why I say cryptocurrency trades at 24 hours, because guess what? It trades at 24 hours. The market never closes for cryptocurrency. Even while you're sleeping, the market is working, and you can get up and go ahead and conduct business and trade currency with another foreign country. So interesting. Now, 2 of the top 10 cryptocurrencies are directly pegged, which are called stable coins, and we're going to talk about that, to the dollar. And those are like Tether and USDC. Now, approximately 16% of the U.S. population trades in cryptocurrency. Now, remember, we are what now? Last census is over 332 million people. And check this out, though. 95% of crypto holders, or check this out, crypto curious people are aware of Bitcoin. So people know about cryptocurrency. Now, here's some demographics about crypto usage. Now, this is interesting. 71% of crypto holders identify as white and Caucasian. 3/4, 74% of crypto holders are male. Almost 1 in 4 crypto owners are between 25 and 44. That's 75%. Dope. Any idea why you think the younger people are so much in it?
Because it's so new and it's so different, and older people tend not to go for the latest fad. It's technology driven. I think the young people have grown up in technology it's much easier for them to understand and relate to. And so I think that's why you see so many young people in it. And think about it, they don't deal with checks and things that we grew up with.
Right. Money orders.
Yeah, they don't deal with that stuff. And so it's kind of right up their alley when you talk about younger people.
Well, sometimes they get a bum rap because some of the older people say, oh, that's because they are all into instant gratification. And I talk to a lot of these young people, and it's not because they're into instant gratification. It's just that they're on it. I know young guys that day trade, that are into options, and I think it's great, especially if you doing your research and you only mess with money that you can lose. But check this one, though. Approximately 63% of people are cryptocurrency, And of that 63, 53% are females. Interesting. Very, very interesting, though. Why so many women are curious about cryptocurrency. Have any idea that with that one? I don't know, though.
I don't have any idea.
None, no idea. Like a deer with no eyes. I have no idea. So, dope. What's up with this cryptocurrency, man? We talked about it before, and we know it's been a while, and some people might not have caught it, but it's a topic that you can't learn enough about, and so reason why me and dope because some people were interested in it, but it's also it's really a lot of it's an interesting I guess I can call it security, let me just say investment. So, what's your feel about it, though?
Yeah, I mean, it's been in the news so much, and everybody's giving it attention. And Bitcoin has everybody's heard about it, and digital currencies are real big, catching the imagination of investors, and especially young people who are looking to get rich quick. And as the popularity grows, we feel you have to look at the value, evaluate the safety of it, understand the risk associated with it. And what we're going to talk about today is it safe? Is cryptocurrency safe? And ways that you can safeguard your investments, try to teach you a little bit about the whole blockchain technology. We'll talk about some of the scams because it's a great opportunity for crooks to also steal money. We're going to talk about some hacks. We're also going to talk about some of the volatility in the cryptocurrency market and some of the regulatory measures that will be in place or should be in place. And we're going to talk about some safe practices for how to handle your crypto investments safely.
And though this is the other thing about cryptocurrency, right? This is the thing about it. It's allowing the little guy to participate in the game that normally was for the people with the big money and the institutional investors. So just like institutional investor can buy Bitcoin that is $70,000, you too can now invest because you don't have $70,000 to buy no Bitcoin, but you can buy a fraction of a Bitcoin and make money. And several people have been making money. Cryptocurrency investing can take many forms, from buying cryptocurrency directly that I talk about to investing in crypto funds and companies. You can buy cryptocurrency using crypto exchange or through certain broker dealers. So there's so many different ways. And me and Dope are going to talk about because it's always important, and this is with any investment, but especially cryptocurrency. You should have an entry strategy and an exit strategy. Now, once you own it, you can store it, you can manage it, you can even buy or sell your crypto in a wallet, right? And it's like if you hold it in your wallet, meaning that you're holding it yourself, almost like I was talking about how you personally hold gold. If you hold your own cryptocurrency in a wallet, don't nobody know you have it. IRS doesn't know you have it. The company that sold it to you doesn't know you have it. You're like your own banker. So that's the interesting thing about cryptocurrency and why a lot of governments around the world are against it, because it's going against the fiat currency, in our case, the dollar, because you can manage and control. It's like you like I said, you're your own bank. Now, the first benefit of cryptocurrency investment comes to mind is the significant growth potential, right? And Bitcoin, the largest cryptocurrency globally, like I told you, over $1 trillion, half the market cap of cryptocurrencies. It highlights this potential by its remarkable returns over the years. Now, investors must keep in mind that previous returns do not guarantee future returns. Like we always talk about the stock market, period, right? But in 2021, the value of the Bitcoin soared well over 60%, demonstrating the possibility of serious returns. And they were speculating that it was going to get up to $100,000. And at that time, it was about, I think it got up to about 65,000. And they said it was going to go to $100,000 per Bitcoin. But since then, the value of Bitcoin has Um, um, oh no, excuse me. In 2022, it plummeted by more than 70%. Went down to about 11,000 Bitcoin. But check this out. Since then, the value of the Bitcoin has increased almost 49% in 2024. Now, this highlights the inherent volatility associated with this particular asset class. And check it out. It is considered an asset class, but they're trying to determine, because it's not regulated, we want to talk about it, whether it's going to be treated as a currency, like a fiat currency, or is it going to be treated as an asset class? So right now, it's being treated as an asset class. So, Dope, let's give a little bit of background, to the basics of cryptocurrency.
Yeah, and start with the basics. What is crypto? Okay, crypto it's a digital currency, meaning it runs on a virtual network. It doesn't exist in physical form like paper money or coins. So they're often built using blockchain technology. And if you think about what blockchain technology is, okay, that's just a method of record keeping information in blocks, which makes it difficult for the system to be manipulated, but it's also linked, hence the term chain. So it's basically a digital record keeping system that allows for people to go in and make transactions. Okay. And so the important thing to remember is that cryptocurrencies, there's no middleman. You can transfer money between people without using a third party. So there's no bank in the middle. There's no credit card company in the middle. There's no broker in the middle. And so if you think about the popular peer-to-peer payment platforms like Venmo, PayPal, Zelle, Cash App, you have to connect to a bank in order to make a transaction. With cryptocurrencies, you don't. It's a transaction you make online, and the money goes from you to whoever you're sending it to. And it's decentralized. I mean, it's not backed by anybody. There's no government controlling it. There's no central bank or corporations. So you have these decentralized cryptocurrencies operating according to computer software that anyone with internet access can download and use to monitor and verify transactions. You think about the US dollar, it's backed by the US federal government and regulated by the Federal Reserve, whereas crypto is not regulated by anybody, which again adds to the risk level. The fact that it's not backed by anything also adds to the risk level.
Yeah, and just want to say out there, that what's up, Jay? What's up, Jay Drury, man? Look forward to hearing from you. Glad to see you join us, by the way. Hey, Tracy. Tracy said, Dope, is it because when I was talking earlier about if you hold it in the wallet, why the governments don't like it, because it's not traceable? And I don't know, Tracy, trying to play a play on word with your name, Tracy. But yeah, that's part of it. It's not traceable. And that's why a lot of governments, don't like it. And that's why there's so much dark money into it, what they call the black market, and a lot of corruption, because you only have a key, a password. It's not associated what they call, what is it called though, when, oh God, I forgot the name of it. When it identifies you who you are. So it doesn't identify you by name.
Well, yeah. So and that's why these folks who be doing ransoms and hacking software be asking to get paid in cryptocurrency, because nobody can find out who it is. So yeah, that's why a lot of people like it, because it is hard to trace.
Right. Yeah. But I want to talk a quick minute about how does cryptocurrency work. Now, to help you understand how cryptocurrency works, let's start by looking at its cryptic name. The crypto in cryptocurrency refers to the software codes that it protect or encrypt. Cryptocurrency networks allowing them to offer secure transactions, like Doe said, and maintain decentralization. See, that's the difference with the central bank, is the sole source that controls monetary policy. And believe it or not, people don't know this, though, but the Treasury doesn't determine how much money is printed. The Treasury prints the money, but it's the Federal Reserve that determines how much money the Treasury prints. And that's why cryptocurrency is decentralized. It's decentralized. No one person controls it. And everybody can see it on the blockchain. Like Doe said, it's a digital general ledger, basically. Now, normally country central banks is tasked with regulating this currency to ensure its value. And financial institutions like banks and credit card companies help in preventing fraud. Cryptocurrencies use encryption and blockchain technology to perform these functions. Now, when a transaction takes place, a network of computers running blockchain software verifies the payment is possible between the parties involved, then executes it. The blockchain also keeps a log of transactions to help ensure transparency. That's the beautiful thing about decentralization. If you try to do something out there, if you try to do something, it's transparent and people can see it. That's what's supposed to help prevent it from being fraud. And to encourage people to verify blockchain transactions, those who verify transactions are called miners or validators, receive compensation. And that's how these people, the miners, because there's no middleman, remember, but these miners are really going out there trying to, let me give you a quick example. Like Visa, when you use Visa for a transaction, right? Visa is, and you buy something from Target. When you use your credit card for Visa, Visa then approves and makes sure that it's you and that you got the credit to purchase that item from Target. And then they charge Target 3 or 4%. Well, with cryptocurrency, it just takes the middle person out and you call it peer-to-peer. But these miners go out there and they approve and make sure that the transaction, and they approve, and that's how you make it peer-to-peer. And that's what they're doing. It's a big formula, and it's a big mathematical formula in a computer that is so big, and they chase to be the first one to be able to figure out the code, and that's how they get paid. It's almost like that's how they get compensation. And once the transaction is validated by those miners, recipients can access the funds and use their private key.
Okay, now let's talk about these keys and encryption, how that whole thing works. So each user within a cryptocurrency system has a private and a public key. Think of the public key as a combination of the routing and account numbers on a bank account. So that identifies where it's going. It's a unique way to send money to you. The private key is how you access your own crypto. It's like the username and password you use to log into your bank account. However, unlike with regular bank accounts and login credentials, you don't choose your private key and you cannot recover it in most cases if you lose it. And I've heard of people losing their key and losing access to their money. So keys are important to understand because they enable the encryption that crypto relies on. Okay, transactions are encrypted using a public key and can only be decrypted and have the funds involved in their transactions accessed with a private key. So if you think about keys, you're only talking about how the ownership work within this particular software system. If you buy and sell cryptos to a third party, keep your coins on an exchange, like in Cash App or Robinhood, the company facilitating your purchases holds your coins for you, and they manage all your keys. If you move your coins to a separate off-platform wallet, you're then responsible for managing those keys. And that's where it gets real tricky, because if you lose it, you lose your key, you lose your money, basically.
And the key is nothing but a password.
It's a whole lot of numbers.
Right. So, Doe, the big question is that I get all the time: how does cryptocurrency have value? Now, some cryptocurrency values are based on supply and demand, meaning their prices are determined by how much others want to use it, as like it says, to purchase merchandise or just to own it, to own the coin. Now, the supply of cryptocurrency and how useful people expect it to be in the future determines the value. Now, that's why a lot of people Believe it or not, like I said, there's 18,000 businesses that use it as currency. Elon Musk and a couple of other big billionaires was trying to push the uses of cryptocurrency by they did. They purchased a Ferrari with Bitcoin, and that was one of the first transactions with that type of money because the Ferrari people accepted Bitcoins, and some NFL players accept their salaries and part of their salaries in cryptocurrencies. Now other cryptocurrencies, meanwhile, may obtain value by being backed by real world assets. For some, like stable coins. We're going to talk about the stable coins, for instance, are crypto that try to peg their value to the benchmark like the US dollar. And so that means, it's kind of back, so it's got a little bit more security, right? Now, and that's why stable coins, and like I told you, one of the stable coins are like Tether and USDC. They don't move as fast. That's because they got a little bit more security. Now, cryptocurrency prices can also be influenced by news about how companies plan to use the cryptocurrency, like I said, world events, and how governments decide to legislate or regulate it.
Think about what it can be used for. Basically, as a currency. And crypto supporters envision a future where crypto is used to buy everything that you would buy, just like dollars or euros. At different points in time, up to 19% of small businesses in the US accepted some form of crypto for payment, but that list fluctuates. Okay, so consumers using crypto in lieu of money has lagged tremendously, and that's directly because of the volatility of crypto. If you look at some of the major swings in the price that Bob alluded to at the beginning of this conversation, I mean, it can drop in a day by $10,000. In February, for instance, Bitcoin price dropped more than $10,000 in value. So it's hard to plan to spend when your value can fluctuate. And just like it can go down, it can also go up. And between July 20th and 27th in 2021, Ethereum's price rose from 1818 to 2298, or 26%, which is crazy. And so that's one reason it has not become more mainstream, because of those big ups and downs in the prices. And the other thing that makes that difficult is when you buy and sell crypto, it creates a taxable event. So if you sell some Bitcoin or Ethereum, you got to deal with the tax consequences of that particular transaction. And that record keeping can be crazy if you think about every time you make a transaction in Bitcoin, every time you buy some or sell some, that's a taxable event. So that's one reason it hasn't become more mainstream.
Now, as an investment, due to some cryptocurrencies' historical price performance and potential to provide diversification among traditional assets like stocks and bonds, cryptocurrencies caught the eyes of many investors. 1 out of 10 Americans of all ages say they invested or traded crypto, though that number rises to almost 1 in 3 for Americans between 18 and 29 years old. Now, financial institutions like large investment funds, brokerages, and banks have also been leaning into cryptocurrency. FDIC has been looking at very closely. I know people who work at FDIC that are on the cryptocurrency panels, because they see that it is coming. Because right now you can hold cryptocurrency. Banks can be custodians for cryptocurrency. They can't sell it, or they don't sell it, but they can hold it as custodians. And so banks also have been leaning in. Now, according to the research of Fidelity Digital Assets of 2021 Institutional Investor Digital Study, 71% of U.S. and European institutional investors surveyed intend to allocate to, invest in digital assets in the future. Now, those considering crypto should remember that crypto is, and we say this all the time, highly volatile, and may be more susceptible to market manipulations than securities. Crypto holders do not benefit from the same regulatory protections applicable to registered securities. And the future regulatory environment for crypto is currently uncertain. Crypto is not insured by the FDIC, nor is it insured by SIPC, the Securities Investment Protection Corporations, meaning you should only buy crypto with an amount you're willing to lose. Now, as an intermediary store of value, crypto can also facilitate the flow of money from a person in one country to those in another, as anyone with the internet can send it at any time for a very low cost without worrying about business hours, traditional currency conversions, or international wires. In other words, why it says it can handle, this, you don't have to worry about business hours because cryptocurrency is traded 24 hours a day. You can go out there and trade it any time in the day. Now, this flexibility can be particularly helpful in arranging international donations or in helping refugees retain easy access to funds, what a lot of people do with charitable contributions.
If you think about the largest cryptocurrencies, everybody thinks of Bitcoin. That's the largest and most well-known. It was launched back in 2009, and it was the first cryptocurrency that allowed peer-to-peer transactions using blockchain technology. Please note that Bitcoin with a capital B is a network that Bitcoin with the small letter B runs on, okay? So Bitcoin uses a proof of work system to validate transactions on the network. This means that transactions verifiers or miners compete to solve a mathematical puzzle using specialized computers through a process called Bitcoin mining, okay? And the reward for being the first to solve this puzzle and mine a block of Bitcoin is a predetermined amount of Bitcoin. So Bitcoin has a fixed supply of 21 million. And this thing we're going to talk about in a minute, this halving, where it's cut in half. The reward for mining a block of Bitcoin is cut in half approximately every 4 years. And so Bitcoin's price, if we talked about this, has been up and down, hasn't been steady. And right now it's up over 70, which is good for me because I got in pretty cheap. And it's been as low as 18,000. So very, very volatile, as we said.
Hey, dope. My sister Gloria said, can one exchange cryptocurrency for regular cash, fiat? And the answer is yes. And that's a good question, Gloria, because you can only exchange this on exchange platforms. That's the only way you can exchange cryptocurrency. And there are thousands of exchange platforms. And every platform isn't created equal because some platforms you cannot change into cryptocurrency. There's some Japanese cryptocurrencies that you can only exchange them on a Japanese exchange platform. So that's why I talked about you need to have an entry strategy and an exit strategy at all times. Good question, Glo, because that's not a given. Let's talk about Ethereum because we mentioned that we talk about the top 10, and these are actually the top two. It's Bitcoin and Ethereum. Like Bitcoin, Ethereum is both a software. Is both a software and a cryptocurrency powering that software's network. It is considered by many to be the most popular altcoin. And whenever you hear altcoins, that's short for alternative coin, meaning any non-Bitcoin cryptocurrency. So when you hear altcoin, you're going to hear that a lot in the cryptocurrency space. The Ethereum software enables many blockchain innovations, like they have what they call smart contracts, and they're supposed to make them a little bit more stable. And they also have non-fungible tokens. I know you heard of NFTs. NFTs are like non-fungible tokens are like, they call them meme coins. Like they could be like baseball cards. It could be videos from certain plays and certain games, and those are NFTs. And Ethereum runs this on their platform, and then they have what they call decentralized apps. While Ethereum, the cryptocurrency, was designed to facilitate transactions on products built on and transactions occurring within the Ethereum network, some have turned to it as an investment. For its initial price, Ethereum was at 31 cents in 2014. Ethereum's value peaked at over 4,800 in November of 2021. Like Bitcoin, it has experienced large swings along the way, landing at around 1,600 in August. But now it's up to about 3,000 right now. So, and that's smart contracts with Ethereum because they have a contract that makes it a little bit more stabler.
And you've heard us talk about stable coins. As the name implies, they were developed in response to the volatility other cryptos experience. So most stable coins peg their value to existing currencies like the US dollar. And some even keep a dollar in reserve for each stable coin in existence and are audited by reputable third parties. It's important to note that not all stable coins are created equal. Just because something's called a stable coin doesn't mean that it's a stable coin. Okay, because some less trustworthy stable coins values have fallen below that of the currency they are supposed to keep track of, or that they were supposed to track, or even lost all of their value, proving that some of these coins can be volatile, even though they may be marketed as stable coins. So be aware of that.
Hey, Gloria asked another great question, though. She said, who monitors the crypto miners to ensure they are not crooks?
Nobody.
Nobody.
It's not regulated by anybody, but I think it's the technology that makes it hard to manipulate or hard to do something that's not that shouldn't happen. I think it's a pretty difficult network to crack because of the technology, and I can't give you the the technical answer as to why, but it's just my understanding of the research I've done that it would be very hard for someone to steal some money. Doesn't mean it's impossible.
Well, right, but like the title, like it says, crypto, it's encrypted, right?
Yeah,
and it's on a decentralized platform. So if you try to go out there, this is the theory behind it. If you go to try to manipulate it, you can't. For one,
you don't have access.
You don't have access, and then it's out there, and you can see. Now, this is the tricky part, Gloria. Now, can they hack into your stuff and be crooks like that? Yes, there's a possibility, but this is the other issue with cryptocurrency, what I mentioned earlier. There could be crooks who are into the drug market, and they could be washing their money through exchanging it through cryptocurrency and exchanging it on other platforms, turning it into another currency and then back to dollars. So that way, crooks can be on it, and they have been. The black market has been very much into cryptocurrency, but as far as them taking your cryptocurrency, it's supposed to be kind of difficult for them to be able to do that. But yes, there are crooks that are laundering money through cryptocurrency, because remember, it's nothing but a password, and if you hold it in your own wallet, only until when you go out on, and this is the thing, in order to exchange it, you got to go on an exchange platform, and that's when the IRS can see it, because the IRS, they can see what's on the exchange platform. So that's how they try to, if you try to, say report tax-wise and you did some transactions and you don't report them on your taxes, IRS will go, oh, buddy, you did not report that, and that's a penalty. So, so good question, Gloria. Now, there's the risk of cryptocurrency. While the eye-popping short-term returns of some cryptos can make them seem like appealing ways to turn a profit, it's important to know the risk when buying, selling, and spending cryptocurrencies. In addition to significant and unexpected price swings, the laws surrounding cryptocurrency are constantly evolving, and the future regulatory environment is certainly uncertain. For example, the U.S. tax code requires you to report the transactions involving cryptocurrencies, like I said, and such as when you sell it for profit and even when you exchange it to receive a good or service. Now, if your cryptocurrency has increased in value since you purchased or received it, your transaction becomes the transactions that you use to purchase an item becomes a taxable gain that you must report to the IRS on your tax return. Now, this could make buying everyday items with cryptocurrency at large scale unwieldy and cumbersome. There's still much that remains to be determined with crypto, from how people treat it, whether it's a store of value like a currency or an investable asset like stock, to how governments will view it. And that's what I'm saying. Now they're viewing it and you report it as an asset, right? So if you pay taxes, you're just paying capital gains taxes on it, not as ordinary income. Now, future legislation may ultimately determine which way people use cryptocurrency, as regulations may make certain uses impractical. Now, new legislation, though, could also upend or have a significant impact on the price of cryptocurrency. That's the volatility. We don't know when the government's going to step in. Now, cryptocurrency holders are not insured like money at the bank, and they also, therefore, can lose it. Now, there's platforms that you buy and sell Bitcoin, may be unregulated. The platforms can be hacked, may stop operating, and some have failed. In addition, like the platforms themselves, digital wallets can be hacked. As a result, consumers have and lost money. So consider how many of these risks you are willing to take before you purchase any cryptocurrency. Remember, it's not insured by the FDIC, nor is it insured by the Securities Investment Protection Corporation.
Yeah, let's talk about a few of the best practices. And as we talk about with any investments, you got to do your research and education. Take the time to thoroughly research cryptocurrencies. If you're interested in buying one, try to understand the technology, the projects behind them, keep up with the market trends and what's going on, new developments in the crypto world. Choose a reliable exchange. Okay, select reputable cryptocurrency exchanges that have good security measures and a proven track record. Look for platforms that have two-factor authentication and cold storage options for your digital assets. When you think about cold storage, that's kind of where your stuff is held off the internet versus your information actually being on the internet. Because it's when it's on the internet, there's opportunities for hacking. Try to have a secure wallet to store your cryptocurrencies. It's a ledger or make sure you got some enhanced security to keep your private keys offline, because as I mentioned before, that's the, no pun intended, that's the key to your security, is that private key. So you got to make sure you keep that safe.
There was a guy that had 250, he made over $20 million in cryptocurrency, and he forgot the password. He just had a blade lock. He didn't write it down, and that was it. It's gone. 250 million gone. He tried to, when you try the key, your password, he could only try it 2 times because he knew if he tried it the third time, it locks up. So he couldn't. So he tried all kinds of stuff. Another guy had his cryptocurrency held on his computer, and he trashed his computer because the computer, went down, and he trashed it. And then he realized the cryptocurrency was on his computer. He went to the junkyard and tried to find a computer. So there's so many ways it's so volatile. But remember, we talk about best practices to safeguard your cryptocurrency. Another one is diversify your portfolio. Spread your investments across different cryptocurrencies, preferably the top 10 and other asset classes. Diversification helps reduce, as we always say, the impact of volatility and potential losses. And consider risk management. Set realistic investment goals and risk tolerance. We always talk about that. Whatever your investment, you must know, what is your goal, what is your time horizon, and what is your risk tolerance. Only invest in what you can afford to lose, and avoid, though, the famous succumbing to FOMO. It was so interesting. It reminded me of the word mofo. It's the reverse. Fear of missing out or impulsive trading decisions.
Let's talk a little bit about this whole halving thing that's coming up. these events are very important, and not just for Bitcoin, but also for the broader crypto market. This is because the Bitcoin becomes more scarce, reducing the supply of newly minted coins. So this halving event takes place about every 4 years. So the next one's going to happen pretty soon, sometime in April.
Right.
And if previous halving cycles are repeated, this is going to create a new all-time highs for the broader industry. For example, it was trading at 9,100 on the 2020 halving date, and it peaked at about 69,000 the following year. And it was worth about 662 when it halved in 2016. By the end of 2017, it was worth 20,000. Now that doesn't mean it's going to happen again, but that's what's happened in the past. And the bull cycles that follow Bitcoin also resulting in altcoin prices exploding. For example, the market was about 66 billion when Bitcoin halved in 2020. Toward the end of 2021, altcoin valuation surpassed 1.6 trillion. That's an increase of almost 24 times. Again, no guarantee it's going to happen again, but that's what's happened in the past.
Wow. Yeah, I mean, it's an interesting investment, but I know a lot of people don't have made money, and I'm one of them. You know,
Me too.
so because I hear a lot of people, talk down on cryptocurrency, but yet they go to MGM Graham and they talk down on cryptocurrency about how risky it is, but yet they go to Casino Live. I don't understand.
Yeah, but let's make a note. I mean, of the money I have invested that I manage myself, I only have about 5% of that total in Bitcoin. So it's not like I'm out there strong, or am I?
Yeah, I got less than that.
Yeah, so
I got less. I only put 3,000, but I've made 7.
Yeah, I think I put about 5, and it's worth 20. So
see, I'll take 3 for 7 all day, and
yeah,
but and I'm not counting. I wasn't counting on that 3. I just had that, and I had it willing to lose. So look, in closing, before deciding to invest in cryptocurrency, investors must contemplate several things: understanding their risk tolerance, investment goal, duration of their investment, and knowledge. We always talk about this being dope. The knowledge in the domain are of paramount importance before investing. Understand what you're investing in. A lot of people said they've lost because I told you this over there was over 13,000, so it's still 8,900. But some of those they call them I don't want to say the word, but crap coins. And that's why we say at least stick it, dope. We stuck with Bitcoins. I did do Shiba Inu at one time. That was in the top 10. But
I got Bitcoin and Ethereum.
So that's the top 2.
Yeah.
That's the top 2. Now, the fact that cryptocurrencies are comparatively new mode of investment come with unique advantages and risks should be considered before being influenced by public opinion. The American cryptocurrency market has been flourishing, which means beginning at a modest position and continuously expanding. The portfolios enable investors to become competent and discover the market dynamics with more ease, right? With more information, there's more ease. Cryptocurrency offers a decentralized and secure alternative to traditional financial systems. While it presents various advantages, it is important to be aware of the potential risks and take appropriate measures to safeguard your digital asset by following best practices, conducting thorough research, and staying informed about the evolving regulatory landscape. Individuals can make informed decisions regarding the use and investment in cryptocurrencies. Just be cautious in what you are invested in. So, with that, I want to bring it on home as we always do to give the summary and takeaways. So let's go to the video. And you can go first, though.
Okay. In closing, crypto is not for everybody. If you are risk averse and don't like the extreme uh, volatility that's involved, don't want to do the research, don't understand it, then it's probably not for you. It is very speculative at this point.
And it's becoming more mainstream, though. More and more people are crypto curious. More and more people are looking into it, doing the research. And so I believe cryptocurrency is here to stay. And I believe at some point in time, it might be used more as a currency exchange to purchase products, what it was invented to do. And if that's the case, that usage will definitely make the value of cryptocurrency increase.
Yeah, and we always talk about diversification. Cryptocurrency does provide diversification. Its movements have been similar to gold. The way gold has been going up, crypto has also been going up almost as a inflation safeguard. It is an alternative investment, but it does provide some diversification from the stock market and bond market.
And lastly, safeguard your investment. If you have it in a what they call a cold wallet, like on your computer or on a particular device, on your phone in a wallet, cold wallet, make sure it's secure. Or if you have it on a platform, make sure you take care of that key, that password, that you have it somewhere, and that no one else can get it too. Because if they do, your money is gone. So with that, we'd like to thank you all. We covered a lot as we always do, but we hope that helped a lot of people. And just want to give a shout out to all my people, as y'all always do. Thank you for hanging in there. Got quite a few people on dope. Garnett, now, what's up now? PSU, we are Penn State. Carl, what's up? How you doing, my good brother? My sister Nolia, my sister Gloria, my sister Linda. Oh, man. The Kansas are representing. Jay, look forward to hearing from you, my good brother. Jay Drury, man. It's been a while. FDIC's finest. Won't have you retired yet. I know you have. You're making all that good money. Ha ha. And Rodney L. Madison, the noteexperience.com. Check them out. Y'all go out there and find another alternative investment out there. And Tracy, what's up? Thank you for the questions, Tracy. So wonderful that you're still hanging in there with us, and tell your daughter hang in there. Just don't be dealing with those crap coins. And did I forget anybody? That's everybody. So thank you all for tuning in. Look forward to this was number 145. We are rolling along, dude. So thank you, Dope. You are absolutely awesome. And I just want to give a shameful plug, Dope. My book is out there on Amazon and Barnes and Noble. The Other Side of the Hoop, the European Basketball Experience. It's not just about basketball. It's about opportunities, and it's about how to overcome obstacles that lead you to just being able to come with some good conditions, how to better your life. So hope you go out there, Barnes and Nobles, the Bobby Kinzer and The Other Side of the Hoop. So I thank you. And I'm going to leave you with this, though. If you don't sacrifice for what you want will be the sacrifice. All right, y'all. Yeah, I'm getting deep up in this, but hello to Dope. Have a good week, you all, and we talk to y'all soon.